Greetings everyone, welcome to Commerce classes. Today we will be starting with the chapter of Departmental Accounting. In this chapter we will be studying the meaning of department and its types, what is departmental accounting and what are the purposes and advantages offered by this, what are the methods of departmental accounting, difference in departmental and branch accounting, and then the numerical part, that is types of problems in departmental accounting, and then we will be solving practical problems of each type. So today we will be covering up the theory component, and next time onwards we will be taking up different types of problems one by one. Now starting with the first thing, what is meant by department and what are its types? Now before we move further, you can stop this video and just consider, just look around and see, can you think of some of the departments which are there in different businesses that you visit, different shops that you visit? And accordingly, can you define the meaning of the term department? Now to make your work easier, let us say you visit Big Bazaar. Now what is happening there? You are finding that under one roof there are different types of goods being sold. You have children's toys there, you have stationery items there, you have consumer durables there, you have clothes. So different types of businesses, different types of goods are being sold under one roof. So they can be referred as different departments. So sometimes this demarcation is formal, that is, you know that there are different departments in one business. Sometimes this is not formal, but this is with the understanding of the owner. Like there might be a businessman who is selling different types of, say, you can say bakery items, biscuits, and then cakes, etc. So he might be adding one more type of product therein, and now he wants to know whether this additional product is making any profit or not. So that way he is dividing his business in three categories. One is for the biscuits or cookies, another is for the cakes and pastries, and third for maybe the third kind of transaction, maybe he is now adding, say, pizza bread, right? So in order to understand the profitability of different product lines, products can be divided into different departments. It can be formal, it can be informal, but we know that different sets of products are being sold under one roof, so each set can separately be called a department, right? So what is the meaning? Department refers to the sections created by a business under one roof to meet the needs of different kinds of goods and services in which the business is dealing. So you are dealing in different type of goods, so you just classify them into different sections. This can be done formally, like we see in the Big Bazaar. This can be done informally in other stores. But in order to examine the efficiency of different product lines, like you want to know whether this product line is profitable or not, should I continue with this? So in order to do this, each department is treated as a separate unit, as a separate profit center. So if you are having, say, cookies and biscuits being sold, you are having cakes and pastries being sold, and then you are selling the pizzas. So you name them as three sections. You do not have, you see, three shops within that one place, and then you are saying cookies sold here, cakes are sold here. You are selling all the three things. But for your understanding, for your own knowledge of the profitability, you are classifying your all products into three different profit centers or three different units, and each unit will be called a department. So this classification herein is informal. What you see in the other big stores, that can be formal. So the examples, as I have given you, a grocery store selling pulses, oils, fruit, vegetable, milk products, a cloth manufacturing business manufacturing and selling ready-made garments of men, women, kids. Okay, so you have different product lines, and so you classify them as a separate unit. So these are departments. A dairy product shop selling milk, ghee, cheese, curd, butter, etc. So this way we can see different departments running in businesses. Now, what are the types of departments? Now when you look at a Big Bazaar, okay, or you look at a shop manufacturing unit which is manufacturing say kids, boys or men's garments, manufacturing and selling these things. Okay, and you might be having a firm which is say buying cloth, or which is manufacturing cloth, raw cloth, and then it is manufacturing the ready-made garments and selling these. It is selling cloth also, it is selling ready-made garments also. So now when you see these different types of businesses, do you see any difference in these? Because accordingly we will classify the departments. Just consider the three and the kind of business they are running, the kind of activities that they are doing in this. Now when you look at Big Bazaar, they are buying different items and then they are selling. So each one is different. When you buy toys, you buy it from a separate manufacturer. When you buy grocery items, you buy it from a separate person, and then you display all these in your Big Bazaar and you sell them. So these are independent units. Whereas when a firm is manufacturing and selling kids, boys, men's garments, then you might be finding that some of their facilities might be common, some of the clothes and materials might be common. So you have a common inventory of certain raw materials herein. Whereas in the third case, the product line is running in continuation. As a first step, cloth is manufactured, some of the cloth is sold to outsiders, and some is transferred to your ready-made garment factory, wherein you manufacture the garments and then you sell them. So sometimes the businesses, the departments are running one after another in line. Sometimes the departments are running parallel, which have common inventories, and sometimes the departments can be just separate. So accordingly, the categories are independent departments. Now, independent departments are those departments which are working independently of each other. Okay, so they have very negligible interdepartment transactions. Like when you visit Big Bazaar, you have a stationery unit therein, you have a grocery unit therein, you have a milk product line therein. So they do not have anything in common. Stationery items will not be sold under the grocery head, or grocery items will not be sold under the clothing head. So independent departments are those which work independently, which are separate from each other, and mostly they have very negligible inter-department transactions. But when you have a manufacturing unit, kids, boys, men's garments are being manufactured and sold. Again, these are separate units. You are dealing with different product lines, but you have a common raw material here. The cloth might be purchased. Some of the things might be common. So we have independent departments, but these independent departments may fall in two categories. Some of them may have different raw materials and some may have a common raw material. Now when everything is separate, you buy inputs separately, you sell them separately, then there is no such problem arising in the accounting work. But when you have some common stocks, or goods are procured commonly, some raw materials are common, then you may have a problem of dividing that raw material into different departments. Okay, so some problems may be there in the calculation part when you have the independent departments with some common raw materials. Now next is dependent departments. So as you are clear now, the departments depend upon each other for materials and work processes. Their outputs of one department becomes the input of another, like we have seen in case of a firm manufacturing cloth and the ready-made garments. So the output of clothing department, that is raw cloth, it becomes the input of other department. So when you have these transfers, when the cloth is manufactured at one place and it is now being transferred to ready-made garment manufacturing factory, then the goods are transferred at some higher price, which is called loaded price. That can be selling price, that can be different. So such loading is necessary to examine profitability, that you can understand. Because if you have a cloth manufacturing unit, okay, on the other you have garments manufacturing unit. Now if the clothing unit transfers half of its cloth being manufactured to garment factory at their cost, then the profitability of this cannot be determined, because if this unit was not there, the garment unit must have procured cloth from outside, and then they must have paid the prevailing selling price of cloth. So it is important then when goods are transferred from one unit to another, they are transferred at some loaded price. So the goods here, which is the cloth manufactured, it will be transferred to the garment at some loaded price that can be either the cost price plus some percentage of profit, or that can be selling price. So this is necessary. We cannot do away with this. It will be there that goods are being transferred from one department to another at some loaded price. But in order to understand or determine the overall profitability, that is when the units are combined, then this loading needs to be cancelled. Suppose you transferred cloth manufactured at a cost of 10,000 to this garment factory at 15,000. Because garment factory, if it wants to buy cloth from some outside unit, it will have to pay price 15,000. So you charge it for 15,000. That means cloth manufacturing unit made a profit of 5,000. You can understand this in these words also, that if you have manufactured cloth of 10,000 and in place of giving it to garment unit, which is a part of your main business, if you sell it outside, you sell it for 15,000, so your profit is 5. So this unit is making 5,000 rupees of profit. You recorded it, you entered it. Now when you combine the two business, when separately we know that this is essential because we need to determine the profitability of clothing unit, which is now 5,000. But when you combine the two, suppose garment manufacturing unit makes garments and they are not able to sell it in this year, so they carry this inventory to the next year. So when you combine the two, now from the businessman's point of view, on the whole, this 5,000 of profit is not earned, because the product hasn't gone outside. It is just lying within the two parts of one business. So when this loading is essential to determine profit of individual departments, but when we combine the results, we need to adjust the loadings or the unrealized profits. So that creates a problem of you can say stock reserves or cancellation of stock loadings. So when we are given a problem on dependent departments, then we will be coming across a problem of transfer pricing. This can be referred as loading, this can be referred as stock reserves, this can be referred as the problem of transfer pricing. So transfer pricing can be a concern in case of dependent departments. Now why I am explaining all these, because ultimately when we are solving the practical questions, we will be having these type of departments given to us. So we must understand that we may come across a problem of transfer pricing. We may come across a problem of distribution of common raw material among the departments. Okay, so these problems may arise. So I hope the types of departments are clear to you, and when a question comes and then you can understand what type of problem is this question having, because we'll have to solve those problems. Now departmental accounting, why is it done and what are the advantages that it offers? So departmental accounting, as name tells you, it is the accounting for the transactions of the departments to find out their efficiency, operating efficiency, right? So departmental accounting means accounting for various transactions of departments to find out their profit or loss. So what happens is that all records of transactions like purchase, sale, expenses of each department are kept separate, assuming each department is a separate unit. So for different departments, their purchases, their sales, their expenses, their stocks, they are kept separate, and each department's accounts are prepared separately to find out their individual profit or loss, right? So the purpose is to find out the working results, that is the profitability, to find out the relative efficiency. Maybe your business is having some additional cash, and now you want to decide that which line should be extended. So the one which is more profitable, which has more scope, you should put money in that product line. Then for controlling business more efficiently and intelligently, you need to know the profitability of each department. It assists the management in taking appropriate decisions. So in respect of pricing, expansion and closure. So for all these purposes, we do the departmental accounting work. So the advantages that it offers is that results of each department are separately disclosed. So in case of bakery unit, you know that profitability or the efficiency of say cookies and biscuit business, you know the efficiency of pizza and pastry business. So each business, you can say department's profitability is disclosed. You can evaluate the performance, you can compare the performance, and then you can examine overall efficiency. It motivates interdepartment competition also, because suppose your one unit is running highly profitably, the other one is just lagging behind, so the people who are working there, they get motivated to work some more, to put in some extra effort, and then come at par or move further. It helps in planning and control and managerial decision making also. So there are certain advantages. Okay, so it justifies the capital outlay. So if you have put in money into one product line and you are not getting enough profits continuously for some years, it means that you should not put in money in that business, it should be closed. So it justifies the capital outlay in different departments. Now, what are the methods of departmental accounting? As I have explained, that in departmental accounting you are to keep separate records of the stocks, purchases, sales, closing stocks, expenses, so that you can know the profit or loss. Now, how do you know the profit or loss? Before I explain the method, just to understand, how do you know the profit or loss? You prepare a trading and P&L account, right? So in departmental accounting also you will be doing the same. So we are to prepare a trading and profit and loss account for the particular year for each of the departments. So suppose your business is having 3 departments, right? Again I am taking same example, cookies and biscuits, pizzas and cakes and pastries. So for each department you want to know their operating efficiency, so you will be preparing, one way is you prepare a trading and P&L account for cookies business. So you do this. Then you prepare a trading and profit and loss account for say pizza's product line. Then you prepare trading and P&L account for say cakes and pastries business. Right. Now in each of these accounts your transactions are same: opening stock, purchases, direct expenses, sales, closing stock on the other side, and then you have gross profit, then you have the indirect expenses like rent, salary, wages, and then you have lighting expenses, telephone expenses, selling expenses, and then you finally get a figure of net profit. So you are preparing separate accounts. Now you see the problem here. In each of these 3 departments their separate accounts are prepared. Ultimately you are to calculate the total also, because the businessman wants to know the overall profit. So then you will be preparing a combined account. Now it requires a lot of effort and you are filling in same set of information. The amounts are going to be different. Opening stock purchases of this department are going to be different from the opening stock purchases of second department, but information set is same. So one way is you prepare the accounts separately and then you combine the information. So this is called preparing separate accounts. Another way can be that you know that we are to put in same information in one trading and P&L account. So what you do is you just make a columnar trading and P&L account. So herein, since you have 3 product lines, so you put in product line A, B, C and total. So when you write opening stock, you have a stock of A, B, C and then total. Purchases of each of the departments and total. Direct expenses of each of the departments and total amount. Likewise here on the credit side also we have 4 columns, one for each department and then one for total. So you prepare the account in a columnar form. That is, the amount column is now divided into the number of departments plus 1 for total. So you record everything and finally you get the gross profit, and then you take up the gross profit here, record all the indirect expenses, and then you get the figure of net profit. So by preparing one statement only, you have calculated the profit and loss of each of the departments and the total. So this is called preparing columnar records. Okay, so these are two different ways. It is up to you whichever you want to follow. All right. So accordingly, we can say that we have two methods of departmental accounting. Separate set of books for each department and one set of book for all departments. So when separate set of books are there, it means you will be keeping a separate record of journal, ledger and subsidiary books. Then each department is considered as a separate unit, and a departmental trading and profit and loss account is prepared independently at the end of each year. Then the results are consolidated to get the trading results of business as a whole. So this is called preparing separate set of books. And in one set of books, you all know that we will be having a columnar accounts. So you will be making only one type of record, that is all the records are kept at one place with separate columns of each department. Then at the end of the year, departmental trading and P&L account is prepared in a columnar form, as I explained you. That in the amount column, we will be having 4 columns or number of columns according to the number of departments that you are having. So we can either have a columnar trading and P&L account, or we can have separate set of books for each departments. Now out of the two, mostly businesses follow one set of books because this is very cumbersome. Okay, then balance sheet is prepared in combined form. Now this separate set is suitable when the business and the size of each department is very large and the business is governed by special laws. Like you have 2 or 3 different departments, and for different departments different laws are there. Then you cannot combine the two. You need to keep separate records. So this will be followed in this case, whereas one set is followed when business is small and transactions are limited. So I hope the different types of accounting is clear. So in a given problem of say 2 or 3 departments, now you can visualize the kind of final account, that is trading and P&L account, that we shall be making. We will be making a columnar account. So we will be having a trading account. We will be putting in all information, but we will be having columns for each of the departments. Okay, department 1, department 2, department 3 and likewise. So I hope these basics are clear to you, basics of departmental accounting. Now sometimes we are asked that what is the difference between departmental and branch accounting. We all know that department accounting is done for separate departments, and similarly branch accounting is done for separate branches. But what is the difference between the two? So number 1 is place of maintaining accounts. So where do we keep the accounts? Now in case of departmental accounting, the accounts are maintained at one place, because ultimately business is running at one place. You see, departments are the departments or separate cost or profit centers created in one business at one place. All the departments are running at one place, so only at one place we are having all the accounts also. But branches are maintained at different places. You may have a branch at Delhi, Bombay, Allahabad, Jaipur. So where will we be keeping the accounts? So branch accounts can be kept either at head office or at branches. Those of you who have done the branch accounting, they know that in case of dependent branches, accounts are maintained at head office. For independent branches, these are maintained by the branches at their own place. Second set of difference is allocation of common expenses. Now when you have a business running at one place, then you have common expenses. Like look at Big Bazaar. Now Big Bazaar is having, this is a Big Bazaar, it is having separate sections for different types of products. Now do you think that they are taking this set at rent at one time, this set on rent at other time? No, they have taken the whole building on rent, or they have bought the whole building and they have the common expenses. So they have common lighting, they have common heating, they have common maybe administrative expenses, etc. So they have some common expenses. These are needed to be allocated among the departments. Whereas in case of branches, since branches are at different locations, so there is no such problem of allocation of common expenses. They might have only one problem, that is of head office expense, because head office is maintaining the records of branches. So head office might be interested in distributing some of its expenses among the branches. So only one type of expense can be allocated, but rest expenses are separate. But this is a major concern, allocation of common expenses among the departments in case of department accounting. And you will be finding that in the practical problem, this is one concern that we will always be having. Then you have problem of reconciliation of accounts. This is not a major issue in case of departmental accounting, because mostly they prepare columnar accounts. But reconciliation of results is very necessary in case of independent branches. They need to add up the things. Then problem of currency conversion. Now in case of departmental accounting, this problem will not arise because the departments are located under one roof. So you do not have different currencies for different departments. But in case of branches, you may come across this problem. If suppose you have a branch in say US, so US records are being maintained in dollars. Now when you reconcile the records, you need to convert the currency. So this problem may be there in case of foreign branches, but there is no such issue in departmental accounting. Now let us consider the type of problems that we will be having in case of departmental accounting. Number one is the simple problems, which only involve apportionment of common expenses. Like you have a common rent for the building, so you are to apportion the rent among all the departments. Or you have common lighting, right? Or you have personnel involved in the whole business, so you are to apportion their wages or salaries among the departments. So allocation or apportionment of common expenses. Second is the problem involving calculation of separate purchases of each department along with the apportionment of common expenses. You see, every next problem is having something of the previous one. So next type of problem will be that along with the apportionment of common expenses that we have studied in type 1, we will be having calculation of separate purchases. Like when the departments are having a common purchase. Suppose a businessman is selling different types of products, and he bought the products in a complete lot, and then he segregated them among the departments and he sold them. So now he will have to distribute the purchase price among each department. So calculation of separate purchases when you make common purchases. So this will be another problem that we might come across. Third type of problem is adjustment of stock reserves in case of interdepartmental transfers. That is the problem of transfer pricing. So we have three types of issues involved in the departmental accounting, and accordingly you will be having practical problems. Now please consider our problems in graduation will not be as simple as a direct problem. So you may have direct or indirect problems. Like direct problem is that you are given all the information and you are to make the calculations. And indirect problem can be that you are just given a separate set of information and you are to calculate the required set of information. So it's not a direct that prepare the account, but you are given certain input, certain information is there, and then you have to make your good sense of judgment and then decide what is to be done and how is it going to be done. Second is that problems can be about the preparation of accounts, or it can be about correcting the prepared accounts. That is, the accounts have already been prepared and you are to correct the accounts. So direct preparation or corrections. So you can have these type of problems. So now next time we will be working on the practical component. So we will be starting with the type 1 problem, that is the issue of apportionment of common expenses, right? And then we will move on to next. So I hope the whole theory component is clear to you. So see you next time. Stay learning, stay happy. Thank you.